Good afternoon, traders. It is Friday, August 20th. The markets are nearly closed. We're actually at New York lunchtime right now on a Friday, so obviously the action has settled down and almost stopped for the day. What I thought I might want to share with you just real quick to kind of see one of the setups that showed up today. Full disclosure, I did not trade this trade. However, I did use it as confirmation for one of my earlier trades that I took during London session. But I do think it's still valid, but I did want to at least share that point with you. You'll notice we're looking at the Euro Pound, the 1 hour chart. Even though this is not a pair that I would normally trade, I still do respect it for its correlation to both the euro dollar and the pound dollar, so that I do track this and keep an eye on that. And I knew that some other traders do like to actively trade this. As a matter of fact, I spoke to a trader today that did trade this very trade. And as again, I was watching it and was aware of it, so it had an effect on my daily trading. What I want to show you though is here we see the 1 hour chart, and what we're looking at is the Fibonacci levels drawn between the high of 82.81, which was seen on August 18th at 7 o'clock GMT time, and a low that we had going back to August the 13th, and that low was at 1900, that low of 81.74. So we had the Fib levels drawn there. There's a couple of interesting things that occurred. One is that we see multiple times that the 618 level came into play. Specifically, you might see this first time that once we had the uptrend and we started to pull back, right away the 618 was seen. To me, that's not really a solid retracement, something that would provide a lot of value. However, even at this point at the 618, if you would have entered with a 20 pip stop to short to continue on with the overall trend, the high of this candle that I'm on right now with this long wick was only 82.53. So if your entry would have been 82.40 with a 20 pip stop, you would have been safe, as this went all the way down to the 81.15, 82.15 area. So it was a fairly decent entry even at that point. Would have paid 25 pips, a little bit better than 1-to-1. The next two are the ones that find the most interest to me, because after it came back down to the 382 level, then it's showing that now we're going to really follow along with these trend levels, or these fib levels, I should say. So the next time it hit here, if you would have shorted again, you'll notice the high at this point is 82.47. So it went against you 7 pips with a 20 pip stop. Obviously, you would have been in play. And we see that we had a low on this candle of 81.92. So better than a 40 pip play, so a 2-to-1 ratio. And then the one that occurred this morning, the third time the 618 level was hit, if you would have entered, and again we're looking at 1 hour candles, but if you would have entered on this candle as it touched the 42.40 level, you'll see that is notated down at the bottom on the high, 42.40. It hit that fib level. Your entry would have been at that point. The most it would have went against you was 82.45 or 82.46, depending on your broker. So it went 6 pips against you with a 20 pip stop. You would see again that you obviously would have been in play. And this morning the move was from 82.40 all the way back down to the prior low for the week, which was this 81.73 area. Obviously, it was a 70 pip pay, better than 3-to-1. So on this one pair throughout the week, just based on this one Fibonacci pull and the 618 level, you would have had 3 very solid trades, and a 20 pip stop would have been successful with all 3 of them. Hope this information helps you. Again, it's not necessarily a pair that I trade, but it does show you the value of Fibonacci levels and how they can help you be very successful trades. For more trade setups and videos like this, please visit youdotrading.com, and I look forward to talking to you again soon. Thank you.